Folks, you may have seen the headline from National Association of Realtors that the housing market is a nightmare. I actually want to reverse that and actually tell you with all certainty and all of my heart that the market that we are in right now is the best real estate market I have seen in a decade. Yes, folks, this is the best real estate market I've seen in a decade for investors. If you are just a normal home seller, it sucks. If you are a flipper that didn't buy right, it sucks. If you are a mortgage broker, a real estate agent, title, appraiser, it sucks. However, for real estate investors, it is the best market I have seen in a decade. We're going to break into that whys and hows and some real numbers, but we're going to have that conversation with Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. How are you?
I'm doing well. So when I tell you that this is the best real estate market I've seen in the last decade, how does that land with you? What are you seeing? We do play in a different world, right? You're in the big stuff. I'm in the small stuff, but I'm curious what you're seeing.
Yeah. So I would say, I would add a little nuance to it, which is to say that it is definitely the best opportunity for buyers in a decade. Reminds me a lot of when I started in 2011, but it's tough to find deals right now. So if you find, and it's very bifurcated. Remember we talked about the K-shaped recovery?
I do remember years ago. Yes.
There's kind of like a K-shaped recovery going on right now in the commercial real estate market. So which is to say that if you are looking at like Class A, top of the line property in like, core property in good market, there is a lot of competition for that property. So prices, but also it depends on which market too, because the markets are overbuilt where it's to sell stuff because occupancy is down. But in markets that are not overbuilt or where demand is really strong, there's a lot of competition for those deals. And just not coming to market because I think a lot of the sellers, if they don't have to sell, they're like, I'm just going to hold and wait till a better time to sell. So those deals are really jumping. On the other hand, you've got the VC properties, right, which nobody wants right now, right? Because so many syndicators went heavy into those properties, they overpaid. Turned out that redo countertops and backsplashes in a 50-year-old property, the stuff behind the walls is still in bad shape. And and those properties have the hardest time with tenants paying and whatnot when things get tough. So there's a lot of reluctance to buy those properties, and a lot of that stuff is coming to market and not even selling. So which is to say that if you have an expertise in buying older properties that are distressed, what have you, you're going to be looking at a lot of opportunity. It's already happening in the off-market space. You're not seeing a lot come to market, but you're seeing, when I'm talking to people who play in that space specifically, they're telling me, wow, I have not had this much opportunity in a long time. If you specialize in distress, there's a lot of distress. I mean, and what I mean distress, like the real distress, like properties that are half full, whatever, mismanaged, partially done renovations, like that kind of stuff. If you were good at that, have a steady reputation, banks are bringing stuff to you like, please take this from us.
Yeah, this is exactly what I mean by being the best real estate market I've seen in a decade. And in the commercial space, according to Kim McElroy, we've got 18 to 24 months still to play out. A lot of that Class B and Class C. But I want to give you some numbers. Kim McElroy shared with me a deal. I think it was in Houston, Texas. It was certainly in Texas. That last sold for $42 million. Probably had debt on it somewhere around 30, 28 or 30. The bank brought it to him because it was just what you said, kind of half done, half empty, all of that. The bank brought it to him at $14 million, and he passed.
Yeah.
Right. So this stuff is coming again. It is, to your point, I think living offline right now. It's not listed, but again, I'm seeing deal flow, phone calls, and whatnot increase. But it's not only in the big stuff. Right. I happen to be telling folks I'm shopping in Las Vegas, right? I'm going to build a very small portfolio in Vegas, one rental at a time. And I've been telling folks about properties I'm tracking on the MLS, right? I'm not doing anything crazy. No mailers, no, postcards, no door knocking.
Yeah.
I'm lazy. But I'm talking about that, and out of nowhere, a viewer of my daily financial news reached out to me, Michelle, and said, "Hey, Michael, I got a house. I'm done. I'm done being a landlord. I'd like to sell it to you." She owns it, near as I can tell, free and clear. And we're working on a seller finance deal that may or may not happen because, again, I'm cheap, but I want to make it win-win for her, right? So, we're talking about, a decent price. I'm going to put a little bit over 10% down. I think the math is 12%. So she gets some money at closing. And then I'm asking her to give me a 30-year note at a below market interest rate. Because again, I have to cash flow day one, and Michelle knows that.
Right.
And, I don't know if it'll go anywhere, but that's just an example of deal flow coming to me. And this is just the latest deal that's come to me. All right. On the MLS, I got a whole list of 12 or 13 properties. I'm going to be offering cash because I have it. The minimum is 25% below list, right? Some of them are over 30%. And again, I don't need all of them, Jonathan. I just need one. And this is the best market for investors. If you're willing to do the work, you don't get emotional, right? Anytime you get emotional on one property or one deal, you've lost. You have no negotiation power. But the fact that buyers are out, the fact that sellers are there, and we've saw delistings increase 48%, which is exactly what I want to happen, because that means if you've kept it on the market, you're motivated, right? You want to sell. And in this market, especially Vegas is the number one market for increased inventory at 78% year on year. I'm like, time to go hard, time to be cheap, time to write some offers. So I'm excited. This is the best market I've seen in 10 years.
Yeah. I mean, I think most of the commentary that you see on how terrible it is really from the seller side. And we're talking about single family space, right? Just how it doesn't make sense. And I keep on telling people, like, if you're telling me that you haven't ever seen a market like this before, that tells me that you've only been around since
5 years, 6 years.
Yeah, exactly. Because this is exactly what it was like when I started. Exactly.
Yeah,
it's like
me too.
We're exactly in that same phase of the market where we haven't had price discovery yet, right? The things are sort of stuck where they were. The sellers are expecting the peak pricing, or even not just expecting it, they need it. They need peak
Yeah,
pricing.
they need it. Yeah, exactly. Yeah.
To get out with their equity. And next thing that will happen is, okay, we don't want a foreclosure, willing to sacrifice some or all of our equity to not have a foreclosure on our record. And some of those people will even be disappointed because a lot of these properties are not worth what the debt is on them right now because they overpaid so much. As I was warning them not to do. Of course, nobody listened.
But yeah, we took a property was worth 100 million to 48. If that wasn't a wake up call, I don't know what was.
It's funny. I saw a post on LinkedIn today where somebody was like, "Wow, if cap rate decompression, if you have 1 point of cap rate decompression, you lose 20% of the value of your property." It's like, yeah, exactly. That's how it works. That's the math. I mean, let's assume going from 5 to 5.5, like to a 6.25 or whatever, right?
Yeah.
4 to 5, right? 4 to 5 is actually, it's 25%. But still, the point is, like, cap rate decompression really hurts us, and it hurts the more compressed the cap rate is to buy, the less cap rate decompression you need to get super hurt, right? Which is what people don't do. So, but anyway, I'm sorry to digress. I'm seeing the complaints from this. But on the buyer side, like you said, it's really loosening up. I mean, if you're seeing more and more inventory on market in your area, that tells you that this is a time when you can go bargain shopping. If you're interested in the commercial space, I really urge you to, like, get on Crexy, get on LoopNet. I'm seeing properties there. They're not, so far I haven't seen anything that, like, I'm really interested in buying, but I'm seeing a lot of properties that are now up 300, 400 days on market, right?
Yeah.
That and it's changed again to act.
Yeah, we have a little bit of a connection problem today over Wi-Fi, but we're going to continue to make this work. When I think about cap rate compression, something you brought up
Recording is
earlier. Yeah, the recording's a little. We're getting a little lag in the recording, so we're going to do our best to get through this. I got a couple of thoughts about what we said. Cap rate compression. The other thing that, again, you and I have been through this cycle that I want people to realize is a cap rate compression from 4 to 5 or 5 to 6. It never goes back to the average. It always skews the other direction. So if the average was 6% and went to 5, it's going to go to 7, at least for a little time. That's just how these cycles work. And the other thing, you talk about deal flow and getting to Crexy in 300 days. One of the things that I know is going to happen in my community is one of our lenders, Velocity Mortgage, does a 90% CLTV loan on commercial buildings, which means you can get a 50% first from Velocity. Let's call it 8%. But then you can go get 40% from the seller. Let's call that 2%. Again, you're going to negotiate, right? Higher price, but lower rate. But that turns potentially into a blended interest rate in the 5s, 30-year fixed, right? No term. So again, deal flow is going to increase. The other thing I think is really interesting is I heard Blackstone say, I think it was a year ago, pencils down. Jonathan Gray, I think it was 9 months ago now, is like, no, dude, we're going hard. We're going aggressive. You see Grant Cardone just bought a foreclosure or something, distressed sale. Again, the big boys, Class A stuff is rocking and rolling. Class B is starting to be marketed quietly, but it's coming. And even single family homes. This is not a nightmare if you are a real estate investor, if you are a deal maker, if you are a wealth builder. Do the work, figure out your market, write offers, network, get in there, let people know you're out there, and be aggressive. Don't you dare pay list price. That's for damn sure.
Yeah. So what I was going to say before the Wi-Fi got funky was that if you're seeing this stuff on Crexy, on LoopNet, that's getting up there in terms of days on market or things that have come back, right? Things that have come back are great because the seller already spent all the money in their head, and now the thing's back on the market, right?
Good
and
point.
They're experiencing some real emotional times right now, even for a commercial property, right? And this is a time when you can go in and make a lowball offer, and it's going to get taken seriously, right? This is how I bought the hotel that you and I are both invested in. That thing had gone into contract 2 times and fallen out 2 times, and we got it for an amazing price because, they just needed to. They just really wanted to sell it, and so and this can happen. So go do this. Go make lowball offers on these properties. The worst that can happen is they'll say no. Most likely what's going to happen is the brokers know that you're looking for deals, and this stuff may come back to you when the seller's like, you know what, I throw in the towel, just take it off my hands.
Yeah, I can't tell you. Again, this is all, I've been here before, folks. 25 years investing. This is the market I call. This is the market I've been waiting for. And again, with my crazy offers, whether it's the one I talked about earlier with Michelle or these 12 properties I'm tracking for crazy offers, they're not going to likely accept my first answer or my first offer, but it'll start the discussion, right? And the money is made in the follow-up. That's one of the things I want people to realize. When I look at my entire portfolio and the 30 or 35% that I call deals of the decade, which are just amazing deals, all of them were 4, 5, 6, 7 follow-ups, right? Eventually the seller, to your point, cries uncle, or they sold to someone else and it came back. I think that's great advice. Find something that came on the market, back on the market, shoot back on the market twice, like our hotel deal. Sign me up for those all day long. The sellers on an emotional roller coaster. They thought they got rid of the problem. The problem came back and bit them, and they are ready to get out. Jonathan, how can people find you?
Well, hey, before we go, I just wanted to bring up one thing. You got no, you're on blushing. So I have always, so in this market, interest rates are higher, right?
Yep.
And I think there's a lot of people out there, I see this all the time, who really are convinced that you make money when interest rates are high, right? Now, this is just, I've always believed this is blatantly untrue. I've always had this gut intuition, mine was working on it, telling me buying at higher interest rates and higher cap rates is more profitable than buying at low interest rates and cap rates, right? So I finally went and actually ran the numbers. I ran this through ChatGPT a few times, a couple of different scenarios, and I compared 2 situations. I compared buying a deal at 4% cap rate with a 2.75 interest rate, which is a lot of deals were being done that way a couple of years ago. And I
Sure.
also assume the cap rates would stay the same. So you're going to be able to exit at that 4 cap, right? Which is a great,
okay.
obviously, if you're selling at a 4 cap, you're happy. Versus buying at a 10 cap with 8% interest, right? Now, under those circumstances, your spread is, at a percentage basis, it's lower between 8 and 10, right?
Correct.
So you're actually not, you have a more basis points, but your spread is lower. Any way that you look at, you equalize the spreads, if you make them proportional, whatever. I ran this so many different ways. Every single time, buying at a 10 cap with high interest rate is more profitable, and then selling at that same high cap rate is more profitable than buying at a low cap rate with a low interest rate and selling at a low cap rate. And the reason for that is cash flow, right? You get more cash flow.
Cash flow, exactly.
Even though you're paying, even though the interest on this example, your debt payment was almost double, right? But since cash flow is so much better and you're getting cash flow up front, it means that not only are your returns higher, your IRR is much higher, right? And it is a better deal. So for all those people out there who are saying, I can't make any money because interest rates are too high, you can, and rooting for interest rates to come down, they're rooting for the wrong thing. You want interest rates to stay high, you want cap rates to adjust accordingly, and that's when you want to buy. You want to buy all day long in those situations. And then inevitably the market is going to get crazy again. Interest rates will drop, cap rates will actually follow, and then you sell. Don't buy more at that point. Sell. That's the time to be selling. Now is the time to be buying.
Folks, this is the best real estate market I've seen in a decade. You can like it, not, you can poo-poo it. You just don't understand. Again, who do you want to be today? Do you want to be a seller? Nope. Do you want to be a real estate agent, broker? Nope. Do you want to be an investor? Hell yeah. Jonathan, where can people find you?
Yeah, please come follow me on LinkedIn, ping me on LinkedIn, reach out to me on LinkedIn. That's where I'm at most active these days.
Awesome. Thank you so much.